Hello and a warm welcome to Inside India. I'm Manisha Tank. Here are your headlines this hour. Indian markets are tipped to edge higher after more records on Wall Street, where investors dug their heels in on all things AI. Gold is pausing its blistering record run, but still sitting above the $4,000 mark, while silver has settled on an all-time high of its own. Elsewhere, Indian Prime Minister Narendra Modi and British Prime Minister Keir Starmer due to meet today. They're going to have discussions that are expected to include their recently sealed trade deal and technology security initiatives. And we'll bring you remarks from the CEO of Punjab National Bank, one of the major players in India's banking scape. He weighs in on a range of issues, including the impact of the GST cuts on the lender.
I think a lot of activity is going to happen in the economy now, and this is not a short-term impact. We can't see and we can't say that it is a 1 month or 2 month things. No, it will have the long-term impact.
Well, hello and welcome from our Singapore studios. Let's kick off with a look at how Asian markets are faring at this time. China is back online after the Mid-Autumn Festival holidays. This is after Golden Week, as it's known, but South Korea still out of play. And there's going to be plenty to catch up on once those South Korean markets do open. SoftBank Group has been very big in the headlines. That has been moving after a number of reports around its robotic division and also its plans for British chip designer Graphcore. Elsewhere, US equity futures, they've been little changed in early Asian hours. The S&P 500 and NASDAQ composite scoring new records in the previous session. This is investors continue to shrug off the government shutdown. That is now in its second week in the US. So there you go, a bit of a mixed performance. And the Nikkei continuing that strong move to the upside that we've seen all week. Indian markets, meanwhile, are going to come online in about 45 minutes or so. Let's get a sense of what the previous session had for us and what might be in store. The Nifty actually declining and breaking its winning streak this week. It closed down about 0.25% on Wednesday, 25,046. So right now we are pointing to a slightly higher open by about 0.1%. And where we've seen the profit taking is mostly in banking stocks, but in the IT space, we're still seeing a little bit of support there. Now, in the meantime, the International Monetary Fund Managing Director, Kristalina Georgieva, has hailed India as a key growth engine of the global economy, saying that the country needs to stay on course with its reforms. She's also added that, quote, bold moves have allowed India to move forward on digital infrastructure. Have a listen.
I think India needs to stay that course of reforming the economy and, of course, like everywhere else, make sure that the small companies, the entrepreneurial spirit of startups is given space to flourish.
The IMF's Kristalina Georgieva. On to another one of our top stories today. The UK Prime Minister Keir Starmer now in India for a 2-day visit, aiming to promote that landmark trade deal that was signed in July. Starmer is also in town to attend the Global FinTech Festival, which is underway in Mumbai. We've been covering it all this week. And he will also deliver a keynote address together with his Indian counterpart, Prime Minister Narendra Modi. That will be at around 5 p.m. in Singapore and Hong Kong today. Some key announcements were made during this festival, and among them was the British digital finance company Revolut, which said it's set to launch its payments platform locally, eyeing 20 million users by 2030. All of this is part of its planned global expansion. The platform will allow Indian users to make both domestic and international payments, and that should start later this year. So let's drill down and talk all things fintech, payments and tech talent with Arvind Shankaran. He's an advisory board member at AFG Partners, a B2B venture capital fintech company. Arvind, it's great to see you. How are you doing? It seems like it's been a really exciting week in Mumbai with the GFF.
Manisha, thanks for having me on the show. And indeed, the GFF sets the pace and is the convergence of ideas, capital and policy makers. And I think this year's edition has proved itself to be really a watershed with a number of announcements being made. And it's pretty interesting to see Revolut, kind of preparing to launch themselves into the Indian market.
You know, Arvind, what's been quite interesting is there's been quite a lot of engagement from the Europeans. You've got the British Prime Minister Keir Starmer also in attendance. What do you think that's telling us about India's profile as a fintech hub?
I think India has always received a very high profile as a fintech hub. In fact, it is the third biggest destination for fintech funding. And I think the story of success is underpinned by the triumvirate of three forces, I believe, have propelled the last decade. The first is, of course, transformative technology, which is in the form of digital public infrastructure. The second is enabling regulatory policy framework, a very enlightened, progressive regulator who has kind of created the ecosystem in fertile conditions, yet at the same time kept a very careful, calibrated approach. And the third, of course, is enlightened capital. We've had very strong risk capital backing the growth of the fintech industry, and fintech lenders now in particular are able to actually raise debt capital from public markets as well. So I think these things all have kind of come together to bring India to the place it's at, catching the attention of international governments and capital providers.
Yeah, and even Kristina Georgieva from the IMF, who's described this move on digital infrastructure as bold for India. Anyway, let's talk about Revolut. I mean, it's definitely had our newsroom abuzz. This is a big announcement to launch in India. They have this hyper-nationalization strategy. But obviously the issue has always been, what is the regulation around that? What is the framework around that? What do you make of this as a step, not just for Revolut, but as a step for India?
I think it's interesting that Revolut has chosen this point in time to enter India. Again, it reinforces what we just spoke about. But stepping back, the terrain is not an easy one. And we've had players come before and not being able to make a dent. I can remember PayPal, when they came back about 15 years ago, and were slow to embrace UPI and were kind of, didn't have their strategy clear enough and had to exit the domestic payment markets. But I think since then, new players are benefiting from lessons learned from those who came before. Also, there's the foundational technology infrastructure is fully available now for them to plug and play into. And so Revolut has demonstrated that they can play the long game in many of the other jurisdictions that they've been successful at. So I think they're going to do essentially the same thing from that playbook. And I think the good thing is they're choosing their battleground well. They have chosen to attack the $30 billion spend by 150 million Indians who are digitally savvy. They want to attack what they call criminal fees by the system, charging up to 5% on things like remittances or travel or overseas education where FX is involved. I think there are other things in their playbook that look pretty interesting. They are going for quality over scale. Initially, they want to be fully compliant. They want to build a local tech stack. I think these are things that are, in my mind, I think a good set of building blocks. Of course, it's not going to be easy. Competition is stiff. There are numerous, multi-currency foreign cards available in the market. The terrain, as we spoke about, is not that easy. And while you can choose to be a fully compliant, full KYC wallet provider, that means that you might have to make some trade-offs in terms of speed of entry and the rate at which you can onboard your customers. But all in all, a very interesting time for Revolut to step in.
Yeah, I want to get a little bit further into the detail of this, Arvind, because earlier this week on the show, we spoke to Pine Labs. And actually, one of our questions centered around, when it comes to payments, all of these companies, they talk about payments, they're more efficient, they're faster. And then it gets to this point where you think, well, then the margins become thinner and thinner. I want to understand a little bit about the model and the demands of the consumer that Revolut is up against, but also who are those competitors that you're talking about, because there's also this wider debate going on in India around favoring foreign companies versus India companies. Just speak to some of those points.
I think what Revolut has done is that they have chosen their battleground, and therefore the licenses that they have sought are very specific. They acquired a company so they can get the remittance and multi-currency account capability, and they've also got the PPI license to issue prepaid cards. With those two, it's very clear where they are going after, and also they're going to integrate fully into the UPI. So the competitors at the moment are other payment companies, banks. Banks actually are quite well entrenched and can be a formidable competitor because they do have, at the end of the day, deep compliance infrastructure. They are category 1 authorized dealers of foreign exchange. They have large treasury desks. They can price very finely. So I think they're going to have to deal with both well-entrenched banks as well as other payment providers.
Okay, Arvind, I'm going to ask you to listen into something now. Jensen Huang has been speaking about, and of course, this is NVIDIA's Jensen Huang, has been speaking about the H-1B visa situation in the US and slapping on this $100,000 fee. And it does have ramifications back home in India, where, for whom a lot of those people being given those visas are from India predominantly. Have a listen, and then I want to get some of your reflections.
There are things that I would love to see that enhances the policy so that there's still some opportunities for serendipity to happen. For example, I don't think that my family would have been able to afford the $100,000, and so the opportunity for my family and for me to be here would not have been possible with this current policy. And so I'm hoping that there will be enhancements to it. And I think this is just a first step, and President Trump is always pragmatic, and I think that it'll be enhanced over time. But this is a nice improvement.
So a very measured response to these changes from Jensen Huang. And I think he's making the point that, there would be probably no NVIDIA without him, and he wouldn't have been able to afford the $100,000. Anyway, what did you think of that comment?
No, absolutely. I think he is the poster boy, and so are many other of our Indian diaspora who are CEOs of leading new economy, internet economy giants of US. So I think that point is not, lost at all upon the the powers that be. That immigration does provide the cornerstone for success in the new economy. But having said that, I think Jensen makes a good point. Never say never. With the current administration, we could see a calibration or a fine-tuning of the H-1B announcements come through in the coming quarters. Also, I think currently those that were in the cycle for renewal, etc., those are not impacted. So I see that at the moment, what's on the ground is not affected largely. I think it's when these finish their 3-year renewal cycles and they come up for a fresh look, or for the new entrants, I think that's where we're going to have a challenge. But I think many of the IT majors, on the other hand, have actually localized their delivery operations and workforce in the US over the last 10 years. I think, if I'm not mistaken, Infosys IT major only has about 8% of their US delivery staff coming from offshore. So there has been mitigation that has been done over the years.
Okay, Arvind, it's been a pleasure. Lovely to talk to you again. Take care. Thank you for wrapping up all of that. Arvind Shankaran there.
Thank you.
We're going to be back. Just a quick break. A warm welcome back. You're watching Inside India. Good to have you with us. Now, the Global FinTech Festival is underway in Mumbai as we speak. Indian Prime Minister Narendra Modi and his British counterpart Keir Starmer are the key speakers happening at an event later today. Ahead of that, I got a chance to speak to Shaji KV, chairman of the National Bank of Agriculture and Rural Development, or NABARD. I asked him for some perspective on the importance of the rural economy in India and the initiatives that the Development Bank is taking to finance and upgrade the sector.
To give you a perspective, the Indian economy, not in terms of amount, in terms of number of people dependent, around 55% of the Indian population is dependent on Indian rural economy. That is one thing. But then the problem here is that when you see the overall GDP of India, this 55% contributes roughly only around 30%, whereas the remaining 45% produces the lion's share. So there is a rural-urban divide which is there, which Government of India is also trying to address. So it's very large, and it is very important in terms of number of lives dependent on rural economy.
So by extension, is there a market there for rural finance? Can rural financing really open up more of this rural economy for the whole of the nation?
Yes. This finance, of course, will augment whatever economic activity in any sector, and more so in rural sector where the own capital of the rural people are lesser. It need to be augmented by finance. And for not only that, the rural people may not be aware of the opportunities there. So there is a double task. First is that we have to make available rural finance at affordable rates at the time they're wanting it. Second is that to make them aware that such opportunities are there, to make good of these finances which are available and make their livelihoods better.
So you're in attendance at the Global FinTech Festival. What is it that you hope to get out of your meetings there in terms of partnerships, conversations and engagements?
Yes. So as the nation's development financial institution focused on rural sector development, what we are trying to do is that we are trying to reduce the cost of operations of any entity which is working in rural areas, more so in financial areas. Not only that, we are in the process of improving the capabilities of the people in accessing finance. On these counts, to reduce the cost of operations of any entity which is interested in working in rural areas, we need to partner with a lot of agencies, including the tech agencies, be it rural tech, agri-tech, fintech. So as NABARD, what we are trying to do is that as credit-led development is our motto, we are primarily dealing with fintechs in terms of making the credit affordable and also the underwriting processes becoming very, it's amenable to the policies of the bank. And also to present the rural people as better customers. In that count, we are partnering with many of the fintechs. We ourselves are now launching digital crop loans for farmers. That is one, the Kisan Credit Card, which is the ubiquitous crop loan scheme of the Government of India, where there is an angle of the interest subvention also is there, and it is mandatory that banks need to vent such loans to all the rural people. So we are making that process more customer friendly and also bank friendly. So we are working with the fintech for that. Plus, we are the custodians of the rural financial institutions, where both we are the supervisors and also we are the development entity responsible for developing their capabilities. On that count, the regional rural banks, which is having around 22,000 touch points in the rural areas, and then the cooperative banks, which is a very vast network, but then in terms of size, they are yet to be noticed by the outside world. So we are now digitizing both of them, improving their capabilities.
So obviously you talk about these touch points and these number of banks, and therefore you're very much within the rural communities, talking to people, understanding what your stakeholders need at grassroots levels. Taking that to a macro picture, there are a lot of conversations going on at the moment about trade. In fact, India's own Industry and Commerce Minister has been abroad talking about trade in the Middle East this week, and agriculture often comes up. Can you just reflect for us how important watching those negotiations is for you and is for those rural stakeholders?
See, now, as far as we are concerned, we are now trying to improve the livelihoods of the people in rural areas. The trade and policy matters are dealt with at the Government of India level. But then at this stage of our development, we are in the process of improving the productivity of agriculture. There is a lot of headroom available in terms of catching up with the world's average productivity in many of these crops. Since the gross cropped area can't be increased, then to improve the livelihood or improve the per capita income, what we need to do is to increase the productivity per unit area, what much they are producing, and then pushing the agriculture per se from agriculture to agribusiness. So that is the process where a lot of surpluses need to be generated, which can be traded outside. Right now, much of the 86% of the Indian the population which is dependent on agriculture, they are they are on subsistence farming. So we need to improve their this economic activity in terms of pushing people to agribusiness activities, rural MSME activities, and such other things, so that they will have enough surpluses. Right now, India is self-sufficient, and in fact, India is a net exporter in many of the agri-commodities. But mostly, those things are coming through aggregators or through large farmers. So what we intend to do is that to make people come together in terms of producer organizations and such other things, and then we have to move the agriculturists up the value chain in the trade value chain.
Of course, and in the last 20 years, we've seen a huge rollout in microfinance to support the rural economy, particularly in agriculture, to support farmers, for example. But one of the criticisms has been of that model that it can lead to high interest rates and a huge debt burden on farmers. How is that being addressed? How are safeguards being nurtured, encouraged, and maintained?
Yeah, so in the microfinance area in India, there are two major segments. One is the self-help group bank linkage-led model, where the rural women are grouped into 10 to 20 members and then linked to a bank, which is what the National Rural Livelihood Mission is talking about. That is the one part which is touching majority of the rural women and also the rural people. The other part is the private entities, the non-banking financial companies, which are setting up shops for vending microfinance credit. So there's a problem of higher interest rate because the cost of funds for these entities, the microfinance entities, are larger because they're raising from either from private equity or from the corporate bond market. So then their cost of operations are also higher because their operational structure is also not in favor of the rural people. So what, as NABARD, as a development financial institution, we are aiming at is that we have to make credit available at affordable rates to the rural people. For that, we are actually hinging on the self-help group bank linkage program. We are trying to take it to the next level where micro enterprises are being set up by these rural women, and then through the rural financial institutions, we are now digitizing these rural financial institutions and including the RRBs and the cooperative banks, so that the capabilities of an NBFC or a private entity in a rural area will be there in the quasi-government entities like regional rural banks and also the cooperative banks, so that the cost, because regional rural banks and cooperative banks have access to the household savings, which itself the cost of funds will be reduced to that extent, because the average cost of fund from household savings will be around, say, 5% or at the most 6%. So that means if we add another, say, 5 to 6% as the operational cost plus risk cost, that means we can give the microcredit at around 12%, which will be affordable. We'll, through interest subvention or with some other means, we'll try to reduce that further. So the criticism of the higher cost of borrowing by the rural people will be mitigated through larger interventions by these rural financial banks and also cooperative banks.
Okay, well, just finally, I want to address the issue of sustainability. One of the big points on your agenda is making sure that farmers, that your stakeholders are adopting sustainable and climate resilient practices. How is that going?
Now, regarding sustainability aspect of climate resilience and sustainability, we are having multi-pronged role. One is that we ourselves work with the non-governmental organizations in setting up resilience programs, in area-based resilience programs in various states, various rural areas. So we have such around 6,000 interventions in watershed development, and also with developing the tribal families where the sustainability is the key factor there. That is one thing. We directly deal with the NGOs for that. The second part is that we are embedding the climate aspects in all our operations, including the rural infrastructure financing which we are doing. And plus, we will work with we are working with the rural financial institutions in developing climate resilient products in terms of the climate resilience is the scope 3 emissions type of activities, where we will help the rural financial institutions to develop products for that. That is another type of interventions.
That was Shaji KV, chairman of NABARD, speaking to me earlier. Coming up after the break on Inside India, we'll discuss the health of the Indian economy amid massive tax cuts, plus the country's booming IPO market. Stay tuned. More views from the Punjab National Bank and HDFC Securities. It's all coming up in just 2 short minutes. A warm welcome back. I'm Anisha Tank and you're watching Inside India here on CNBC. Some news that we are closely following. President Trump has announced that Israel and Hamas have signed off on the first phase of his Gaza peace plan. Both sides have settled on that long-awaited deal after 3 days of indirect talks in Egypt and just 1 day after the second anniversary of the Hamas attacks on Israel. President Trump sent Special Envoy Steve Witkoff to Egypt and received the news just a few hours ago, saying that the deal means all hostages will be released soon. And Israel will withdraw their troops to an agreed-upon line. Israel's Prime Minister Benjamin Netanyahu, in a written statement, said he would convene his government on Thursday to approve the agreement. Well, we're still waiting for details. Those could come today or over the weekend when President Trump is expected to visit Egypt. And with all of that in our minds, let's get a check on oil prices, both WTI and Brent crude down close to 1% on this major development. And we'll be speaking more about it in the next hour in our Access Middle East show. But back here on Inside India, we are counting down to the market open in India. This is how things are shaping up right now, pretty much looking flat for the open for the Nifty. This is after the previous session where the index declined 62 points or 0.25%, breaking a four-day winning run. And the profit-taking mainly hit banking stocks, but in the IT space, there was still some support coming through. You can see the Indian rupee also pretty much unchanged. So India's markets regulator, SEBI, has raised the minimum block deal size to 250 million Indian rupees, up from 100 million. This comes as part of an overhaul to improve transparency and efficiency in large equity trades. The new rules will take effect 60 days after SEBI's circular is issued. We've also been tracking IPOs this week. It's been a really big one. India's largest listing of the year, Tata Capital's $1.75 billion IPO, was fully subscribed on the final day of bidding. But the grey market premium suggests its listing may be muted. Investor interest mainly came from qualified institutional buyers that subscribed 3.42 times their allotment, while non-institutional investors 1.98 times and retail investors 1.1 times. Tata Capital is set to list on October 13th on the BSE and NSE. In other news, the Global FinTech Festival wraps up today in Mumbai, and CNBC sat down with Ashok Chandra, the Managing Director and CEO of Punjab National Bank, on the sidelines. He addressed the impact of Prime Minister Modi's tax cuts on India's economy, the central bank's easing, and more in a wide-ranging interview. Here's what he had to say.
This has been the landmark movement as far as the GST simplification process and the cut which has happened. I think all the sectors, whether I can talk about the retail, agri, MSME and the corporate, all these sectors are going to be benefited, and I will explain those things in detail about that. See, if I can talk about the retail segment, and the retail is specifically about the vehicle loan and the housing loan, because these are the two important components are there. So vehicle loan, you have seen the rate cut has happened from 28% to 18%. And in the vehicle sector also, if you see the components of the vehicle like tires also, the rates have been reduced. So input tax has also been reduced. All put together, I think good momentum we are able to see in the vehicle loan segment. I think already the momentum has started, and anyway, this is the festival season also. And banking sector as a whole, we see the Q3 becomes the most busiest season for the bankers now. So, and with this GST rate cut, I think a lot of tractions are going to happen. Second important component in the retail segment, again, the housing. And housing, if you see the cement cost has been reduced by the GST cut now. Again, there is a 10% rate cut is there. So again, that sector is also going to revive now. And a lot of tractions, a lot of bookings, we have started seeing that. 22nd of September, when this has been implemented, I am seeing in my bank itself, a lot of improvement has happened in the housing loan booking and the vehicle loan. So retail loan segment, definitely it is going to go in a very, very big way. Now, if I can talk about the agri sector also, there is a farm mechanization, even the tractors, the GST rate cut has happened, and definitely that is going to boost the retail segment. MSME, again, the many spare parts and the components which is related with the MSME sector, there also the GST rate cut has happened. And third, very, very important point is, many of those, the day-to-day consumption, if you see, it has been made zero now. It was 5% or earlier 12%, it has been brought to zero. So what has happened, the disposable income of the people have increased now. So definitely that entire amount is going to come in the economy, and a lot of the drive we are able to see now. Another important factor is from September onwards till December, you have seen that CRR 100 basis point cut is there now. So there is going to be enough liquidity in the system for the bank. Again, 100%, 100 basis point CRR cut was there. And that impact is also we are going to see by the repo rate cut. That impact is also going to be seen now. So we are seeing that from the banking point of view, we have enough liquidity. Rates are very, very reasonable in the market, and the GST rate cut means the goods rates have come down. So all those factors put together, I think a lot of activity is going to happen in the economy now, and this is not a short-term impact. We can't see and we can't say that it is a 1 month or 2 month things. Now it will have the long-term impact, and going forward, I think definitely as a banker, I can see that good credit growth can happen in all those segments now.
The view from Punjab National Bank there. Well, let's talk about the RBI's rate trajectory, the Indian economy, and the IPO market. We can digest it all with our next guest, Dheeraj Relly, who is MD and CEO of HDFC Securities. Dheeraj, it's great to have you with us. I feel like it's only Thursday. The week is not over yet, but we've been awash with news. How are you taking it this week?
Oh, I think this week has been good, and I woke up with the positive news coming in from the Israel and Hamas deal. So that's good. We've been having skirmishes, geopolitical skirmishes, and that's impacting all over the world. So good. In India, the mood is optimistic, though we've had last 1 year as a difficult year and underperformance when we compare it to the other markets. But overall, mood is very optimistic in India.
I'm really glad that you raised some of that geopolitical stuff and this deal in the Middle East, because if you read many of the reports coming out from many of the banks at the moment, all of them suggest that we cannot ignore the geopolitical headwinds and the economic headwinds coming from outside India. So taking that into consideration, reports are also suggesting a more dovish tone at the October rate-setting meeting for the RBI. What are your thoughts about that moving forwards? I mean, everybody always says there's always a chance of a surprise extended rate cut, but most analysts putting it towards the end of the year, if not pushing into 2026. Inflation feeling like it's a bit more under control. So when we balance those outside headwinds with the domestic economic picture, what are you seeing? What's arising?
I think RBI has done a commendable job with the monetary policy in India. They did a jumbo rate cut early this year and also changed the stand to accommodative and then moved to again neutral stand in June. So from that point of view, I don't see a significant opportunity for rate cuts, more rate cuts. Maybe we'll get another 25 basis point, not in a hurry. So we are very well positioned in India in terms of inflation and also in the transmission of interest rates. So after a jumbo cut of repo rate of 100 basis point and CRR cut of 100 basis point, that will play out till November 29th. So I believe that transmission is already started to happen. We've seen weighted average lending rate coming down by 58 basis point for all scheduled banks. So to that extent, I think the monetary policy has done its bit. Now, even on a fiscal side, we've seen the GST 2.0 reforms to boost the consumption. So we are seeing good. We have witnessed a great monsoon also. A culmination of all these factors are looking very positive. I think the most important theme, what we need to understand from the Reserve Bank of India in India is that they are moving from a prescription-based regulatory regime to principle-based regulatory regime. So they have done significant efforts to ensure that the credit flow is good. I think in the last policy, they have allowed more lending for the capital market ecosystem. They've revised the limit for loan against shares for banks by 5x and even for the IPO financing by 2.5x. So to that extent, I think they have been taking all possible measures and ensuring that we have a robust monetary policy framework to enable a significant growth in India.
Okay, Dheeraj, I love your optimism, and I don't want to rain on anyone's parade. But can we just talk about tariffs from the US for a second? Because some of the reports are suggesting that the impact of tariffs on India should not be underestimated, that they could hack 1% at least GDP from growth forecasts. So what do you think of this sort of trade offensive, sort of charm offensive that's going on at the moment? That we had the industry and commerce minister in the Middle East, and it's all about working something out that would perhaps buffer India from the impact of some of these tariffs if there is no progress with the US.
I think in last 1 year, we've seen that US have been protectionist in its trade policies, and more so for India, we have seen higher tariffs. That's something to be resolved with the US, and it will have its own negative impact. But to counter its negative impact, India has been taking measures to boost the domestic consumption. I just spoke about GST 2.0 reforms, also ensuring that we give enough and more monetary support, monetary policy related and fiscal policy related support to ensure that we focus on increasing the domestic demand. Of course, the specific sectors like gems and jewelry and textile and many more sectors where we have large export relationship with the US will get negatively impacted. I think it will have also a negative impact on the GDP as well as more on the sentiments. So to that extent, we've already seen underperformance in Indian markets for last 1 year as compared to the most of the markets.
Okay, now I'm very excited to talk to you about IPOs. It's been a very intense week on that front, Dheeraj, but some pretty expensive valuations out there, and in many cases, pretty strong subscription numbers. Some of the analysis has been like, these markets are on fire, the appetite for IPOs is on fire. But what's your assessment? Because I wonder if there's sort of a warning sign in there as well, that we shouldn't get ahead of ourselves.
So there have been frenzy in IPO and primary markets in India for last almost 2 years. Last year, about 91 companies on the main board could able to raise almost $18 billion. And this year till now, 74 IPOs have come and they could able to raise almost $10 billion. And this quarter is a very busy quarter. You just mentioned about Tata Capital IPO and also about LG Electronics. I think it's not euphoric. Its frenzy is definitely there. Some of the IPOs have been priced to the perfection or even excessive pricing. We have seen a wide range of listing gains. So on an average, we've seen this year about 9% gain on a listing day, but it is as high as 73% for one IPO and minus 40% for another IPO. So the range have been really long. And we have also seen the interest coming in from the institutional customers, particularly from foreign portfolio investors in the primary market, though they have been relentlessly selling in the secondary market. So to that extent, I think there have been frenzy. But if we have to look at positive of this frenzy of IPOs, we could able to give exit to a lot of MNCs. Whirlpool, LG, Hyundai could able to take out billions of dollars and able to monetize in India as they are getting great valuations as compared to their respective markets.
Yeah, absolutely. In fact, Dheeraj, one of my producers introduced me to a new word today, finfluencer. So these are the people who are on YouTube with many, many videos recommending various IPOs or digesting IPOs to particularly mom and pop investors. We're talking about not the anchor investors. We're not talking about the institutional ones for a second. I want to talk about those who can really get caught out, because when the hype dies down and those prices come down, they get hit. And I wonder, some of these people, they're taking out personal loans to be able to fund these investments. Do you think that there needs to be more caution, that we should be wary of this kind of thing?
In India, the domestic liquidity is tied and married to the domestic opportunities. Earlier, they were investing more into the real assets than to fixed deposits. Now there has been a great exuberance in terms of participating in the capital market. We have now 200 million DMAT account holders. To that extent, it has been a great story in terms of financialization of savings and equitization of savings. But I agree with you that there is a need for us to bring in caution on the table when it comes to the pricing of IPOs. All IPOs have not been priced where they're leaving some money on the table. So to that extent, some of the investors are losing money on listing, and particularly when post-listing, when they get trapped into the a loss aversion bias, then they stick on to these suboptimal investments also. And that's true for most of the markets, and it's playing out in India as well.
All right, Dheeraj, it's been a pleasure speaking to you. Thank you so much. And, thank you for your positivity as well. It's always very refreshing. Dheeraj really there from HDFC Securities. Now, in the meantime, Indian markets just coming online. A quick look at the opening trades when we come back in just about 2 minutes. Back, you're watching Inside India. Indian markets are coming online right now. The Nifty was pretty much losing its winning streak in the previous session, but now just edging up about just a fraction. 25,050, just holding above that 25,000 level. That had been the big watch point this week. Would it do so? It's Thursday, but we've still got Friday to come. The rupee pretty much unchanged as the markets open this session. Let's take a look at some of the movers today. Tata Consultancy Services due to report second quarter results. That's happening later. Analysts are expecting a modest uptick in revenue for the tech giant, but weakness in its quarterly net profit. Shares ahead of that report. You can see trading off about 1/10 of 1%. We're also watching India's second largest public sector bank, Punjab National Bank. CNBC caught up with its chief, Ashok Chandra, on the sidelines of the Global FinTech Festival. We asked him a bunch of questions, including what the bank's biggest challenge is in the rural areas. Here's what he had to say.
We are introducing a lot of digital initiatives. Yesterday itself, we have launched 5 digital products in the GFF. With the benign hands of our Secretary Saab. In that, 3 products were for the rural areas, like KCC renewal, dairy loans, end-to-end digital, and the tractor loan. Because rural India, you know that there is a demand for the tractors are there, and that is the digital express tractor loan. And all these 3 products are end-to-end digital. No manual papers are required. And from the sanction, the disbursement, documentation, everything happens through the digital channel now. Now, the biggest challenge is that how you can educate the rural people to avail those facilities now. See, these sanctions can be given within half an hour now. But people have to be told that these facilities are there and they should come forward and avail those facilities. I think awareness creation is one of the biggest challenges for all the banks, including for our bank. So what we have done now, we are engaging the business correspondent. We have 10,200 branches, but we have 33,000 business correspondent. And we are providing a lot of digital training to these business correspondent so that in turn, they can give the training to the rural people to come forward and avail those digital facilities.
We also asked Mr. Chandra about how the bank is leveraging artificial intelligence, and he gave us some colour around its augmented reality and virtual reality programs to train its employees. Have a listen.
AI, everybody is talking about it, but in a true sense, I think if it is implemented in a right way, I think definitely it will change the entire gamut of every sphere of life now. Banking, in fact, we are using it in every sphere now. One is the customer facing, whatever the instruments are there. There we are bringing a lot of AIs, like we have come out with the Gen AI chatbot, and name is Pihu now. So that is available on our website also and on the call center also. People can connect and get the appropriate feedback and appropriate reply. We have also come out with this is the first time we have come out and the industry first. That is the QR-based customer feedback. So we know that we are in the customer-driven industry, and customer feedback, customer centricity plays the very, very important role. So today we have 10,200 branches. So we were thinking that how to reach out to those even the remote centers of the country. So we have come out with the QR-based feedback wherein it is deployed in all the branches of our bank now. And once you do the transaction in the branch, immediately you get a SMS that person so and so has done the transaction for you, and then is a QR code is there. You can just scan and through the emoji you can give your feedback, and that is integrated with our HRMS center in the head office, and on a real-time basis we are able to see what is happening across the bank now. So this is one thing which a bank has implemented, and we are analyzing all those feedbacks through the AI, which geography, what are the improvements that is required to be done now. Then another Gen AI we have implemented in the training of our employees now by the conversational metaverse, and using the AR and VR, that is augmented reality and virtual reality. We are interacting, means every training center, every employee has to go for half an hour metaverse conversation, and based on that interaction we gauge the feedback and what are the etiquettes and what are the improvements that is required for the employee. I think this is one way of improving the skill set of the employee. So we are using it for the HR improvement, for the customer improvement, and for the operational resiliency also.
Punjab National Bank's MD and CEO Ashok Chandra there speaking to our CNBC team. In other AI stories that we're watching, SoftBank Group is doubling down on its industrial AI plan by snapping up ABB's robotics business in a $5.4 billion deal. The move comes as SoftBank pushes to merge its AI and robotics ambitions. And separately, British chip designer Graphcore, which is also owned by SoftBank, is reportedly planning a $1.3 billion investment package in India. This comes on the heels of UK Prime Minister Keir Starmer's visit to the South Asian nation. Let's turn to crypto now. Bitcoin pulling back from all-time highs above 126,000 right now. Let's have a look at Bitcoin for you. I think, there we go. 122.48 there. Look at that, down about 1.2%. The crypto's recent rally has minted many new millionaires. CNBC's Robert Frank has the details.
The rise in Bitcoin helping to create another 70,000 new crypto millionaires over the past year. There are 240,000 people with crypto holdings worth $1 million or more. That's according to a new report from Henley & Partners and New World Wealth. There are 450 crypto centimillionaires. They have $100 million or more, and 36 crypto billionaires. The price of Bitcoin has more than doubled just over the past year. The total value of all crypto has grown by over $2 trillion. So, how much of that will be spent? Well, new research by a group of economists found that for every dollar gained in crypto wealth, crypto investors spend about 10 cents. That would equate to about $200 billion in additional spending this year. With early crypto investors now getting older, in their 30s and 40s, buying Lambos has been replaced by real estate. The study found that locations with large crypto populations saw larger gains in home prices when crypto rallied. Robert Frank, CNBC Business News.
Remarkable stuff. Okay, in other news, Prime Minister Narendra Modi has inaugurated the Navi Mumbai International Airport. That happened on Wednesday. It's located on the outskirts of Mumbai. The airport's expected to ease congestion in the city's existing Mumbai airport, which is one of the busiest in India. It's owned by billionaire Gautam Adani's Adani Group. Prime Minister Modi says the new airport will help establish the region as the biggest connectivity hub in Asia. Let's get one final check on Asia markets. The best performers today are the Nikkei 225, TAIEX and the Shanghai Composite, which is back after the Mid-Autumn Festival. It was the Golden Week holiday. Laggards on the board, though, are Singapore and Hong Kong. So a mixed performance. That, I'm afraid, is all we have time for here on Inside India for now. Stay tuned. Access Middle East is up next.